Good afternoon, everyone. This is Assistant Professor Amol Rajeshirke presenting you the another resource person for this great online lecture series organized by University of Mumbai's both model colleges, Vijay Lakshmi Vishwanath Devi College, Tayare, as well as Vishwabhushan Bharat Ratna Dr. Babasaheb Ambedkar College, Ambadave, Mandankar, in association with Dombivli Shikshan Prasarak Mandals, KV Pendharkar College. This college giving us a technical support. And today, on 17th September, this is the third lecture for the stream of commerce, and we are very pleased and happy to have just a prominent professor, a well-known and teacher of commerce, Dr. Richa Jain, Madam. Very welcome to you, Madam.
Thank you, sir. Thank you so much.
Yes. Today, Madam is going to deliver his enormous knowledge for the TY student in the subject of financial derivatives. The today's topic is foreign exchange market, introduction to derivatives. Let me introduce Madam in very brief. Madam has completed her MBA in finance, as well as Madam also having a PhD degree from Udaipur University. Then some added qualification is Madam already done with many refresher courses, as well as post graduation and orientation courses. Madam also the member of many colleges board of studies. Madam performed or presented many research paper or research project all over the world or across the national and international platform. Madam also work as a research guide, and there have been 5 students who awarded a PhD in her guide sheet. We are very blessed today to have such a enormous knowledgeable personality as a resource person. A very welcome to you, Madam. First of all, I'd like to request all my viewers and all my dear students, please subscribe our channel. Or if you have not hit that bell icon, please hit it so you can easily notify all upcoming lectures with a super knowledgeable resource person for your kind subject. Madam, this is done for the introduction. Now over to you. Richa, Madam, please start.
Okay. So can you hear me?
Yes, yes, ma'am.
Yes, ma'am.
Okay. A very big thank you for all the introduction, Dr. Amol. I also thank the organizer, Dr. Dalvi College and Ambedkar College, and also Pendarkar College for inviting me to deliver this lecture. I heartily congratulate you people for taking care of the people who are the students who are not getting this kind of advantage of getting lectures in Mumbai. You're really doing a great job. I must congratulate you, all the 3 colleges, for that. I also welcome all the students of TYBFM who are here to engage into this lecture. I will try to do my best to give you an introduction to financial derivatives. In case you have any questions, you may please ask, but I would request you to keep your questions for the end. So it would be better and we are not able to break the link for, and it will be beneficial for all the students. In case you have any problems, you may please raise your hand and I will try to answer that. But try to do it at the end. That would be a major request from my side. I will answer all the questions, but towards the end. Thank you so much. Let me just start the session by sharing a small video with you people. Can you see my screen right now?
Yes, ma'am. बनोते मैम. मैम वीडियो का ऑडियो ऑडिबल नहीं है, थोड़ा सा
नहीं है audible. Okay,
नहीं है.
okay, not a worry. I'll just stop and I will start with my own PPT. I think that would be better. Anyways, it is all over. Okay. Okay, can you see it now? Is it clear? The PPT?
Yes ma'am. Yes ma'am.
So today we are going to cover basically the two things, that is the module 1 of your financial derivative, and I will also try to cover a part of module 2 because that part will help you in understanding the remaining subject, that is the core of your financial derivative. So I'm going to cover that. Believe me, if I cover this module 1 and part of module 2, you'll be able to handle the whole subject easily. Okay, so coming to what are derivatives. As I just showed you in the video, and I'm sorry if the video is not clear, what are derivatives? Let's just understand it in a layman's term. Derivative is a financial instrument. Financial instrument means something which is involved in financial market, something which has a money value, that is called a financial instrument, whose characteristics and value depend upon the characteristics and value of an underlier. This is very, very important. Derivative, as the name suggests, is a derived product. Derived means इसका value किसी और से मिलता है हमें. It means it is not a product in itself having its own value, but it derives its value from some other. Now you'll ask me what other? It derives its value from your equity share. It can derive your value from currency. It can derive your value from commodity. Commodity means it can be a wheat, it can be gold, it can be oil, it can be any cereals that you eat, or it can be a bond instrument. So what do we understand? Derivative is not a product in itself, but it is a derived product. It is not a basic product, but it is a derived product. And it derives its value from where? It derives its value from its underlying. And underlying can be commodity, equity, bond, currency, or many other things we will learn as we go ahead. So you must have heard about these things in the market. What are futures? What are options? So these are basically derivatives. And today we are going to learn about futures and options basically. Okay, so derivatives are instruments which include security derived from a debt instrument, share, loan, risk instrument, or contract for difference of any other form of security. So now what we understand, a contract. It is a contract that we have seen also in the video. And what is a contract? Contract is basically an agreement between two people, two parties, two banks, two brokers. It can be between any two legal entities. And those contract, when you call it contract, as per the definition of Indian Contract Act 1872, it will be a binding contract. So it means if somebody does something wrong to you, you can then take them to the court. So therefore, it is a valid contract. So this is a contract that derives its value from the price of its underlying asset. That is the most important part. You need to understand that the price of a derivative will always come from the price of its base. And what is the base? Base can be equity. So just understand, if say Reliance share is trading at a X price today, let's understand the price is 1,000 rupees. So the price of a future in Reliance, the price of an option in Reliance, that is a derivative in Reliance equity, would always take its base price from the equity share of Reliance. If you have a future in US dollar, okay, so it will take its price from the basic price of US dollar against rupee, against pounds, against Australian dollar, or any other currency for that matter. I hope it is clear. So now let's classify what are the underlying assets. किन किन के ऊपर एक derivative का price determine हो सकता है? What are the underlying assets? The underlying assets can be commodity, it can be currency, it can be stock, equity, bonds, it can be indices. What are the indices? Indices means your index of your stock exchange. For example, your Sensex has a index as what? Sensex BSE index is known as Sensex. NSE, National Stock Exchange, index is known as Nifty. So Nifty, your Sensex, if you look at the global indexes, all the Dow Jones, all those things are indices. Then there can be underlying as interest rate. What are the interest rate? The prevailing interest rate in the market, the interest rate on bond, the interest rate on currency, the interest rate on interbank borrowing, the interest rate on the government securities market, different underlying, different interest rates in the market. Okay, your syllabus also talks about the history of derivatives in India. Say the history of derivatives is as old as the Bombay Cotton Trade Association started that in 1875. I think if you people have seen Guru movie, you must have seen that the equity and derivative trades in that movie, and it is a very, very old kind of thing. Okay, but we may also call it as the latest thing in the market because it is completely evolving now. It's completely changing its form now. In 1952, the government banned the cash settlement and option trading, which was started in 1875. It almost got banned in 1952. Again, government started in 1995 of trading option was lifted, like the ban was lifted in 1995. In 1999, the Securities Contract Act was amended, and that is your SEBI Act. Now it is known as the SEBI Act. So it was amended in 1999. And the derivative was included as a part of security. The definition was broadened. Then BSE started derivative trading in 2000 and NSE started in 2005. The latest that happened was option trading in commodities, not in equity, but in commodities that started in 2017. Okay, so how many types of derivative markets you know? We have basically over the world, not only in India, over the world, we have two types of derivative market. One is known as OTC or the over-the-counter market, and second is known as exchange-traded derivatives. That is the trade of these derivatives happens in stock exchanges. What is a OTC market? Let's see. It's a tailor-made derivative. Tailor-made means customized. What is the meaning of customized? You and me enter into a trade and we decide the rules and regulation according to our whims and fancies, according to our choices. These are not traded on any exchange. The moment it starts trading on exchange, it has to follow exchange ka rules. And if it follows exchange ka rule, they are very standardized. Okay, they cannot be tailor-made. They cannot be changed according to our whims and fancies. Okay, so such contracts which are tailor-made, which you and me enter together. What contract? That we'll see later. But right now, understand, you and me entering into a contract, we call it as a customized or a tailor-made contract, and it is known as over-the-counter trade. Basically, I just want to tell you that in India, we don't have any OTC market right now. We have, I think, after 2000, the OTC market was closed down. These consist of investment banks. Basically, that happens in London market or any other major financial market like Singapore, Hong Kong. These consist of investment banks with traders who make market in these derivatives. One investment banker trading with another investment banker. One hedge fund trading with another hedge fund. Government hedging with another corporates. So all this doesn't happen in India now. We don't have any over-the-counter market. And the products that are traded in these markets are basically swaps and forward rate agreements. As we go ahead, we'll see what are swaps and over. Now, what happens in India is exchange traded derivative, right? So what are, as the name suggests, exchange traded derivatives? It means the trade of these derivatives happen over any recognized stock exchange. Everybody knows about two stock exchanges in India. One is BSE, another is NSE. But derivatives are not limited to BSE and NSE. Derivatives are also traded on commodity exchange like MCX and CDX. Okay, so we will hear about them as we go ahead. But right now, to understand that these derivatives which are traded on a recognized exchange are known as exchange traded derivatives. What is the use of these derivatives? Exchange traded derivatives can be used to hedge exposure. Now, what is the meaning of hedge? Right now, just understand that hedge means, when you see a field, a farmer's field, the farmer protects his field through that some what do you call, steel kind of a rod और कांटे वाली बार हम उसको बोलते हैं, which is spiked, जिसके ऊपर कांटा कांटा जैसा लगा रहता है, so that the stray animals cannot enter, so that some cow or dog or any other animal cannot enter the farm and spoil the agriculture produce over there. So we are trying to do what? Protect our farm from outside animals. So how are we doing hedging over here? We are trying to protect our future risk. जो risk future में आने वाली है, we are going to protect that risk by using a derivative today. Tomorrow, if the price of wheat is going to increase, we can enter into a derivative contract today and protect that risk. That is what is known as a derivative contract, and it is traded on exchanges. I will give you a lot of examples to explain later on, just the basics right now. The classification of derivatives. Derivatives can be classified into four basic types: the forwards, the future, the options, and the swaps. Forward, future, and options are known as the basic derivative. Swap, and then there are exotics and other, which are known as hybrid derivatives. But right now, for you to concentrate, four types of derivatives: forward, future, and option. They are basic derivatives, and swap, which is a hybrid or the complex derivative. Now, the most important part, we come to forward contract. Basically, again, I must tell you that again, forward contract is not happening legally in India because it is not exchange traded. Okay, I told you very clearly that in India only what is happening is exchange traded derivatives and no OTC. OTC derivatives are not happening in India. But still, if you like and you don't want any, you don't have any problem with legal binding, you can enter into a forward contract with a friend. But remember that it will not be a legal. Now, what these contract madam is talking about, and you people are not understanding, a forward contract is simply a deal or a dealing between two people where one becomes a buyer, another becomes a seller, and you are buying or selling a underlying asset. What is underlying asset? It can be equity, it can be commodity, it can be commodity like gold, it can be commodity like oil. So it can be anything. So you are entering into a contract to buy or sell a underlying. Then you will tell me, ma'am, that is what we are doing at equity exchange also. And we are also selling wheat and rice and everything in the market also. Then why this derivative? Why are we supposed to study this derivative? What is the difference? Is there a difference? 100%. When we are studying all together different subject, there has to be a difference. So what is this difference? Understand. Let's take a normal market. Let's take a normal market of wheat selling. What do? You want to buy wheat? Go to the shopkeeper, buy wheat at whatever price it is available, get it. So for example, let's take the example of this pandemic. Before pandemic, you wanted to buy 20 kgs wheat for a month. You went to market, bought it at a price of 30 rupees per kg and got it. But once there was a lockdown news and everybody was rushing to market to buy, the wheat price suddenly raised to 40 rupees or 50 rupees. Now what is happening? You only had wheat for the month of March. Now for April, May, June, July, you have paid prices as high as 40 rupees, 50 rupees and 60 rupees. Okay. So, but you were not knowing that prices will increase. Right. That was a very uncertain situation. Nobody predicted. Nobody in the world predicted it. But there are certain situations which do happens into our market, say because of the weather. The wheat may be a good crop or there may be a bad crop of wheat, and that will definitely influence the price of wheat. So such situations we know, and it normally happens in the market. There may be inflation in the country and the prices of wheat may increase. So to safeguard ourselves against these kind of things, we can always buy or sell in advance. Okay, so if I'm a farmer, I produce wheat. I produce wheat, and my wheat is ready in the month of, say, January. Okay, and I know in January when my wheat is ready, the market is going to give me 20 rupees or 30 rupees. But I'm also a smart farmer, and I know that there's going to be scarcity of wheat, because in certain part of place India where the wheat is not where the wheat is also grown, there is not heavy rain. Okay, so there will be less production of wheat in that particular area. So I am smart. I know मेरे यहाँ पे अच्छा हुआ है, but दूसरी जगह पर कम होने वाला है. So what will happen? Ultimately, in the month of May and June, the prices of wheat are going to rise in the market. Right now, it is only selling at 20 rupees or 30 rupees. But in the June, it may happen that the wheat, because of the scarcity, demand and supply, remember economics, demand and supply. Because of the economics or because of demand and supply, the prices of wheat in the month of June may become 60. So can I, as a smart farmer, do something about it? Sitting in the month of January, sitting at my home, sitting in my office, or sitting in my farm, can I do something about it? Yes, that is where the role of derivative comes, which cannot happen in your normal market. So what I will do as a farmer, I will forward sale. I will sell my wheat, not actually, only on paper. I will forward sell my wheat for the month of June. I will tell you, you are my buyer. I will tell you that, okay, in the month of June, I will give you this wheat at 40 rupees. Okay. And because you are a smart buyer, listen, you are also smart. तुम्हें पता है कि जून में prices are going to be rupees 60. Right now it is 30, but June it is going to be 60. So you know what you say, okay, I'm ready to buy at 40. So it's a win-win situation. The farmer who is selling the wheat today at 20, 30 rupees or 20 rupees will sell it at 40 rupees in the month of June. And right now it is only a contract. It is only on paper. Okay. तो उस फार्मर ने क्या कर लिया है, जून का प्राइस लॉक कर लिया है. बायर ने भी क्या किया है, जब मार्केट में 50 और 60 रुपए में मिलेगा, उसने अभी से 40 रुपीज में बाय कर लिया है. So it means what is happening, both the parties are in a win-win situation. So this is a contract. We are getting into a written contract, that written, only paperwork. We are getting into a written contract that I as a farmer is going to sell you 1,000 quintals of wheat at 40 rupees per kg, and you are going to buy it from me. So on a fixed date, say 15th of June, I'm going to give you delivery and you are going to give me cash. Clear? I hope it is clear. This is called as a forward contract. No exchange, no third party in between. Only two of us decided. You are the buyer, I am the seller. I am going to give you cash. Okay. And I have protected myself. You have also protected yourself, because 60 rupees market में लेने से अच्छा है, you are buying it at 40 rupees right now. Sorry, I'm so sorry. Okay, I'm so sorry. Let's resume. Okay, so this is a forward contract. Buyer thinking that the price will go up, seller thinking the prices will go down. No money is exchanged until the settlement date. What is the settlement date? As I told you, 15th of June. And what is the settlement date? When you give me wheat, I will give you money. Oh, sorry, I will give you wheat and you will give me money. I'm the farmer, so I will give you wheat, and you are a buyer, so you are going to give me money. And that is how our contract will get completed on June 15. Moving forward, I told you the other time, the future contract. Future is also very, very similar contract like forward, but the only difference is this is going to be exchange traded. So it's exchange traded. Can you trade wheat on exchange? Yes, we do trade wheat on exchange, and we call it as a commodity derivative. What we call it? Commodity market or commodity derivative market. In the same way, can we do equity shares? Yes, we can trade, buy or sell equity share in the market in the same way we did it for wheat. Understand again. Say you have a share of Tata Capital, or you have a share of Tata Motors, any company. Let's take one company. You have a share of Tata, you have say 100 shares of Tata Motors. Okay, and today the price of Tata Motors in the market is rupees 500. Now you see that after 30 days, not very long time, not 6 months or 9 months, you're only predicting for 30 days, 45 days, 60 days, 90 days. It may go up to a year, but right now to understand, say you know that after 30 days, the price of Tata is going to go up. Okay, so what will you do? You will hold the shares, right? You will hold the shares and keep it till 1 month and sell it in the market. Suppose on the day you are going to sell it, the prices go down. It was only your thought process that prices will increase, but the prices actually went down in the market. Now what will you do? Either again hold it for another 30 days or another 15 days. Whenever wait, you may hold it for years together. Or if I'm a smart investor, I will enter into derivative contract. What I will do on day one only, today only, what I will do, I know the market price is going to increase. So if the current price is 500 and there is a upfront into it, there is like the market is going to increase. What I will do is say let's after a month the price is going to 540 rupees. I know that. That's my prediction, my technical analysis, my fundamental analysis, which tells me that Tata is strong company. अभी तो कल उनको बड़ा कॉन्ट्रैक्ट मिल गया है पार्लियामेंट बिल्ड करने का, सो दे आर गोइंग टू डेफिनेटली गोइंग टू इंक्रीज. ऑल अदर कंपनीज, टाटा ग्रुप को मिला है बट ऑल अदर कंपनी are going to increase, the share price are going to increase. There is a positive news about Tatas in the market. So 540 तो किसी भी हाल में होने ही वाला है. If I use a normal market, I will have to wait and watch. But if I use a derivative, I can enter into a contract not with you, but with exchange. Which exchange? BSE or NSE. I will enter into a contract with NSE, National Stock Exchange, and with them, I will sell, I will forward sell. आज ही बैठ के मैं एक महीने के बाद के लिए I will sell my 100 shares or 500 shares or whatever number of shares, it will be in a lot, 100, 200, 300. I will sell them in a lot, say 500 shares at a price of 540 rupees, जिसका price आज 500 है. I am selling it at 540 rupees after a month to the exchange. Right? Now, this whole one I will wait and see. अभी क्या होगा? मैंने तो कॉन्ट्रैक्ट कर लिया एक्सचेंज के साथ. सो ऑन द 30th डे I will give the exchange I will give the exchange my 500 shares and they will pay me a price of 500 into 540. So कितना प्रॉफिट हो गया मुझे? 40 rupees per share into 500 rupees, 20,000 rupees का मुझे प्रॉफिट हो गया. I am very happy because it was a futures contract, and futures contract is what? It is a binding contract. एक बार आपने कॉन्ट्रैक्ट कर लिया, the exchange has to buy it from you. समझ में आया? You are trying to protect your risk and giving all the risk to the exchange. अभी what will happen? अभी उस दिन market में price can be 530, it can be 550, it can be 560, or it can be 520. I have sold it at 540, taken my 20,000 rupees, and I am very happy about it. Now what will exchange do? Exchange के पास अगर उस दिन price है 530 in the market, exchange will suffer a loss. If the price is 500 and 450, exchange will have a profit of 10 rupees. Say, financial market is a zero sum game, and it is exchange. And exchange has hundreds and thousands of players over there. तो किसी ने 40 रुपीज का प्रीमियम लिया होगा, किसी ने 10 रुपीज का, किसी ने 20 रुपीज का, किसी ने लॉस का लिया होगा. So किसी का लॉस और किसी का प्रॉफिट लेके exchange will try to, the whole market will try to balance itself. It will be gain for me, it will be loss for somebody. डेफिनेटली किसी को लगा होगा कि प्राइस कम होने वाली है, तो उसने मार्केट में 500 की जगह 460 में ही बेच दिया होगा. तो जो 40 रुपीज का लॉस हुआ होगा वो 40 रुपीज मेरा गेन हो गया. आर यू अंडरस्टैंडिंग? आई होप इट इज क्लियर. बिकॉज एक का लॉस इन द फाइनेंशियल मार्केट इज द गेन ऑफ अदर. सो it is a transaction. What is a future contract? It is a contract, like I told you what the contract is. It's a contract between two parties. Here you are a buyer or a seller. You can, same way the way you sold, you can buy also. You can buy after 1 month, you can buy after 45 days, 60 days, 90 days, whatever. Okay. And when these contracts are exchange traded, they are very standardized. Standardized means you have the prices and the lot size determined for your share by the exchange. Say, for example, Tata Motors shares will be traded in the lot of 100, 100, 100. So I cannot sell 479 shares. I can only sell 500 shares or 400. Again, the price 540. I cannot determine. The exchange will give me 1 month ke baad ka price is 540 or 538 or 537. I have to take that particular price. These are standardized contracts. Okay, but exchange gives you a lot of options and you can choose among those options. So it is really a good kind of a thing that you can do. Come on, next one. So here we see an exchange. You are a future seller, or on the one side is a future seller and on another side is a buyer. So if it is a buyer, all this thing with the exchange is happening through a clearing house. What is the clearing house? The clearing house takes the payment and it gives it to the exchange, and it takes the scripts from the exchange and give it to the buyer, right? So there is a exchange in between, or there is a clearing house in between, which helps you in dealing with all those things, and these people are doing their job very nicely. Okay, let's come to the third type of contract, that is options. I have to be little fast, I can't go in very detail because of the time constraint. What are options? Options are again the type of forwards and future contract, but as the name suggests, options comes with a option. Option matlab choice. You have a choice to cancel, extend, prepone, or like you have a choice to cancel, prepone or postpone the contract. Future contract में मैंने क्या बोला था? On that आफ्टर 1 मंथ आपको वो 540 में बेचना ही पड़ेगा. अगर मार्केट में प्राइस 560 भी है तो भी आपको 540 में ही बेचना पड़ेगा, क्योंकि आपने एक कॉन्ट्रैक्ट कर लिया है विच इज बाइंडिंग. बट यहाँ ऑप्शन में एक बहुत ब्यूटीफुल चीज है. व्हाट इज दैट? you have a choice to cancel the contract before the option date, मतलब 1 महीने से पहले भी, on the day of option settlement, that is on that particular day, or on that day you can decide to take it forward. You may extend it. Okay, so we can postpone it, we can prepone it, or we can complete the contract on a particular date. So here again your risk is more saved. How? If you are, आपने 540 में कॉन्ट्रैक्ट किया था टू सेल, आपको लग रहा है प्राइसेस और बढ़ रहा है, तो व्हाट विल यू डू? यू विल कैंसिल दैट कॉन्ट्रैक्ट ऑफ 540, ओके, एंड एंटर इनटू अनदर कॉन्ट्रैक्ट फॉर 560 एंड मेक मोर मनी. आपको लग रहा है नहीं 540 में तो लाइक मुझे बहुत बेनिफिट है, कीप इट एट 540, गेट इट सेटल्ड ऑन 540. आपको लग रहा है नहीं प्राइसेस और बढ़ने वाला है मार्केट में, 2 महीने के बाद तो और बढ़ेगा, extend it for 1 more month and make it 600. So you have an option. So what is the difference between future and option? Almost similar structure. Only thing, futures are binding in the sense that they have to be completed on a given date. Options have that option. उनके पास choice है. But फिर क्या होगा? Options are little costly. You have to pay a higher cost. You have to buy them at a प्रीमियम। सो लेकिन हाँ, ये एक एडवांटेज है, अगर आपने एक ऑप्शन खरीदने के लिए सिर्फ 10 रुपए प्रीमियम दिया है, एक शेयर के पीछे 2 रुपए दिया है, या एक पूरा ट्रांजेक्शन के पीछे आपने 10 रुपए दिया है, तो आपका मिनिमम, अगर आपने कैंसिल कर दिया तो आपका मिनिमम लॉस क्या है, वो 10 रुपए। फ्यूचर में आपका पूरा लॉस है, आपको जितने में सेटल करना है आपको उतने में सेटल करना ही पड़ेगा, देयर इज नो चॉइस, नो कमिंग बैक। बट यहाँ पे आपके पास एक चॉइस है, बट दैट चॉइस कम्स विद अ प्राइस, एंड दैट प्राइस इज नोन एज प्रीमियम। तो हम एक प्रीमियम पे करते हैं, जब हम खरीदते हैं तभी हम वो प्रीमियम पे करते हैं। अगर हम अपना ऑप्शन को एग्जीक्यूट कर लेते हैं, कंप्लीट कर लेते हैं, तो हमारा वो प्रीमियम वैसे ही कवर हो जाता है, हमारे प्रॉफिट में से वो माइनस हो जाएगा, वो कवर हो जाएगा। इन केस हम कैंसिल करने का सोचते हैं, हमें लगता है कि नहीं ये 540 नहीं जा रहा है, व्हाई शुड आई सेल, इट इज गोइंग मोर, आई विल कैंसिल माय कॉन्ट्रैक्ट, I will not sell at 540. Then what is happening? I'm getting a loss of the 10 rupees, which is okay, which is anyways okay. I'm also paying brokerage to the stock exchange. So I'm to my broker. So it's okay. I'm ready to bear that minimum loss. That kind of premium loss is very, very nominal and people can bear that loss. So I think option trading is very good. But still, yes, definitely the market is not that educated about it. And we have very less trade in option in Indian market as compared to the global market, as compared to the developed European or the US market. Okay. Options basically दो टाइप के आते हैं, कॉल एंड पुट। आपने आराम से सुना हुआ, हमेशा ये नाम सुनेंगे, कॉल ऑप्शन, पुट ऑप्शन, कॉल ऑप्शन, लॉन्ग ऑप्शन, शॉर्ट ऑप्शन, सुना है ना? यस। सो व्हाट इज अ कॉल ऑप्शन? कॉल मींस कॉल, आने दो, आने दो, आने दो मींस you are a buyer, right? So it is coming to you. Call means you are a buyer, you are taking a buying option, you are a buyer. Put means jane do, place it, put it, jane do, so it means you are a sell, right? Come on. So what's the call option? Call option mein buyer is more powerful, buyer has the right, buyer pays a premium and gets a choice कि मैं ये बेचूंगा या नहीं बेचूंगा, बेचूंगा तो कितने पे बेचूंगा, नहीं बेचूंगा तो कैंसिल करूंगा, whatever the choice is with the buyer, because buyer pays the premium, buyer pays the higher price. Bichara seller in this case is a bichara person, he has to do whatever the buyer is doing. If buyer is changing the contract, seller has to accept it. So the bichara party is a seller over here, the buyer is a major party, or buyer is a king over here. He can decide on the day of that he wants to extend the contract or he want to execute the contract. If asset price is higher than the strike price, option is known as in the money. What is the meaning of asset price is higher? Say for example, अभी हमने जो 540 का प्राइस लिया था, ओके, वो जो प्राइस है मार्केट में उस दिन प्राइस इज ओनली 530. Tata Motors का शेयर का प्राइस इज इन द मार्केट on that day after 1 month the price is 530, बट मैंने ऑप्शन क्या लिया है, बायर ने 540 का, तो मुझे प्रॉफिट है या लॉस है? आई एम अ बायर, नॉट अ सेलर, आई एम अ बायर. ओके, इफ सो फॉर मी एज अ बायर, इफ द एसेट प्राइस, मैंने जो प्राइस फिक्स किया है 540, मार्केट में प्राइस इज 530, that option is known as in the money. The reverse, if the asset price is exactly at the strike price, same होता है दोनों, 540, money is at the money. तो मेरे वाले एग्जाम्पल केस में बायर कौन था? एक्सचेंज था. If asset price is below the strike price, it is said to be out of money. So 3 very important terms that we use in option trading. This they are known as ATM, at the money, ITM, that is in the money, and OTM, that is out of the money. Okay, now take the example of the put option. This put option gives the seller the right, sorry, I'm a mistake, seller the right but not the obligation. वो उसको चेंज कर सकता है कभी भी. Seller can any time change the option. यहाँ पे seller is the king because he is paying the premium, and buyer, and the other party, the buyer, is the bichara person. He has to accept the contract as it comes. Now coming to the last part, not last part, but last type of option, Last type of what you call as derivative, that is swap. As the name suggests, what is swap? Exchange. आजकल आप लोग मोबाइल में एक कॉल को होल्ड पे रखते हो, फिर दूसरा उठाते हो, उससे बात करते हो, फिर वापस दूसरे को कनेक्ट करते हो. यू डू दैट, यू स्वैप योर कॉल्स. एक फ्रेंड से बात चल रही है, उसको बोलते कीप इट ऑन होल्ड. यू टेक अनदर कॉल, योर ममा इज कॉलिंग, सो यू टॉक टू हर, again continue talking to your friend, right? So you swap the calls. Same thing over here. Here what is happening? Two things are happening simultaneously, the buy and the sell. Okay, it means it's a private agreement between two parties to exchange. It can be two parties, can be me and exchange, me and you, to exchange cash flows in the future according to a pre-arranged formula. The two commodities can be swapped. It can be interest rate versus one stream of interest rate. It can be one currency against another currency. I'll explain you how. Say for example, now let's example of a currency derivative. What is currency derivative? Say I want to buy dollars in future, and in exchange I want to give rupees, right? So what is happening? My one deal is I want to buy dollars in against rupees. So I'm selling rupees and buying dollar at a certain price. What I can do extra? How will I swap it? अब मुझे क्या करना है? जो डॉलर खरीदना है, it should be, what should be my profit when I buy dollar at a price which is below the market? Okay, I cannot. So what I do is I enter into another contract. Here I was buying dollars at a say price of 74 rupees. Okay, where the market price is 75. I'm buying dollars at what price? 74 and making a profit of 1 rupee. Right. So what I will do is now I will sell the dollar in the market at the same time. At what price should I sell? Higher or lower? Because I want to buy from the market at 74 rupees. When the price in the market is 75 rupees, what am I supposed to do? I'm supposed to sell that in the market at a price which is higher or lower. Again, see, this is a separate deal. I am selling dollar. So I'm selling dollar, तो मुझे यहाँ भी profit होना चाहिए. और नहीं हो तो भी मुझे उतना loss होना चाहिए जो 1 रुपए से कम होगा. So I should sell dollar either at 74, okay, or at max 73.50 कि मुझे loss खाली 50 पैसा का हो. और वो उधर मैं 1 रुपी कवर कर रही हूँ, तो 1 रुपी minus 50 पैसा, I'm still in a profit of 50. समझ में आ रहा है? Next. Okay, your syllabus talks about two committees. Basically, these two committees are the LC Gupta committee, and there's a correction in the syllabus. It is not JC Verma committee, it is JR Verma committee, and it is 1998, basically. Okay, so this is a LC Gupta committee recommendation. Why these committee recommendations? When you saw the history, you saw that all these exchange 1875 se chala aa raha tha, but then government stopped it in 1952. Again, they wanted this market to flourish. So in order to make this market, the rules and regulations for this market, they appointed a high level committee with 24 members into that committee in 1996. Sorry, in 1996. In 1996, and this committee was headed by Mr. L.C. Gupta, and they submitted their report in March 1998. Right. So this committee basically is what? The committee which gives rules and regulations and give power to SEBI. Because of this committee, now the SEBI has become very powerful and has a big role to play in derivative market. It's all because of this committee. The committee has given a lot of power to SEBI. Okay. Before 1998, whatever the market was doing in case of derivatives as well as in other market, there were a lot of problems. You know, there are a lot of scams that had happened in 1991. Okay, and after that also, there were a lot of scams and the market was not very regularized. So in such equity market, if we want to launch derivatives and expand the market, there has to be certain rules and regulations. So committee was formed and there were 24 eminent people into that committee and they submitted their report in 1998. what was the main recommendations? I have just taken some 7 to 8 recommendations. Stock exchange futures to be starting point of equity derivative. They said equity derivatives should be the first thing that should be launched in the market. Let's wait for commodity derivative to be launched. Let's launch only the equity derivative, because Indian market was little mature in terms of equity trading. So let's trade only into equity derivative. SEBI to approve. SEBI was given all the power to approve rules, bylaws, and regulations of the derivative exchange level and all derivative exchange level. SEBI need to be involved in framing exchange level regulations. How the trade will take place at BSE and NSE, SEBI will have a say into it. SEBI should create a special derivative cell along with equity cell, as it involves spatial knowledge, and a derivative advisory council may be created to tap outside experts for independent advice. And you may take some experts and get advice for them. Legal restriction on institutions, including mutual fund, on use of derivative should be removed. There were a lot of restrictions. That market was completely regulated market. So there were a lot of things that has to be deregulated in that particular market. Okay. Existing stock exchange with cash trading to be allowed to trade derivatives if they meet a prescribed eligibility condition. That small exchanges, say for example, Rajasthan has a stock exchange. So if that exchange doesn't have members more than 50, they will not be allowed to trade into derivatives. Two categories of members, that is the clearing members and non-clearing members, with a later depending on the former for settlement of trade. This is to bring in more traders in the market. We will study who are the participants into the market, and then I will tell you what this is. Broker members, dealers, and salespersons are in the derivative market must have a certificate program, must have passed a certificate program to be registered with SEBI. So it means even the brokers and dealers, they are supposed to be knowing about the rules and regulation of the market. Okay. After the recommendation of this committee only said that, okay, we are not able to cover all the things. So there has to be another committee which is to be formed, which was known as J.R. Verma Committee. And that committee was basically giving recommendation on the risk containment in the derivative market in India. Now, the most important thing which I kept for the end, basically, is the main players in the market. Who all are the participants in the market? The main participants in the market are buyer and seller. As I told you, we can be buyer and seller. Then there are three categories of participants in the market whom we call as hedgers, arbitrators, and speculators. These are very, very important category to participate in the market: hedgers, arbitrators, and speculators. I'll explain you what each one of them mean. Who are hedgers, or what are hedgers? Basically, I told you what is hedging: protecting against risk. So वो लोग क्या करते हैं? They will enter into a contract, future contract, and उनका काम ही यही होता है. They can be even doing it for the banks. Banks can do it for themselves. They can be a broker who is hedging the risk of a corporate. They can be the advisors who can hedge the risk for a company. They are basically, it is used by the businessmen. Say, for example, the company like Mahindra. Okay, this company manufactures what you call it as vehicles. So you know the basic thing that goes into vehicle is a steel body. So they want to buy steel, or they want to buy iron and make steel out of it. Rather, they would directly buy steel. Okay, so they cannot store. If they say that steel price is less today, they cannot order the steel for the whole 1 year and keep it in their godown. That will have a carrying cost. Okay, इतना steel को storage करेंगे, steel खराब हो जाएगा, कुछ problem हो जाएगा. So they cannot store the steel for the whole year. Instead, what they will do, अभी they will buy only for 1 month in physical form. Actual stock उतना ही लेंगे, 1 महीने के जितना. बाद में वो अभी वो और क्या करेंगे, another 1 year का, another 6 months का. What they can do is they can buy in advance in physical form, in non-physical form, in the form of your derivative. वो एक particular price पे 6 महीने बाद का futures या options खरीद के रख लेंगे. Price lock हो गया. Your price. So what is the advantage of first advantage of derivative? The price is locked. You are locking a future price, right? So this is the first advantage of derivative. The price is locked. The second advantage being you are creating a price discovery in the market. What is the meaning of price discovery? You are trying to discover the price. अगर टाटा महिंद्रा ने एक प्राइस डिस्कवर किया है 6 महीने बाद का स्टील का रेट से द स्टील इज गोइंग टू बी XYZ और से 10,000 रुपीज पर टन. ओके 10,000 रुपीज पर टन. उतना ही टाटा मोटर्स ने भी अराउंड 9,990 rupees per ton. Okay. Another company, Hyundai, buying steel and keeping it at the price of 10,100 rupees. So it means you are discovering a price after 6 months. What is going to be the price? You're protecting yourself against risk. That's the biggest advantage derivatives have. Okay, so these are hedges. What are speculators? Speculators are not businesses. Basically, they are the traders in the market. They don't want any steel to be bought. They only want to make advantage of the price difference. आज एक प्राइस है, कल दूसरा प्राइस होने वाला है. आज खरीदो, कल बेचो, and make money out of it. They just try to play on the as like a broker. Okay, but yes, they are a big participant in the derivative market. They do help in increasing the size and volume of the market. They are just money makers. They are, you can call them as money makers. They don't have to protect risk for themselves like hedgers, like what Mahindra did. क्योंकि उनको स्टील चाहिए, इनको कुछ नहीं चाहिए. They only want a money game kind of a thing. Third category is known as arbitrager. What are arbitrager? Arbitrager are some people who buy from one market right now and like your swap deal and sell them into another market at the same time. वो क्या करेंगे, डॉलर को इंडियन मार्केट से खरीदेंगे, उनको लगता है कि डॉलर सिंगापुर मार्केट में ज्यादा महंगा बिक रहा है, आज का आज वो उसको वहां पे बेच देंगे. Today we all are allowed to do currency trading like that. So what they do, if the dollar is cheaper in Australian market, they can sit in India, buy dollars from Australian market, simultaneously sell it into Singapore market. Though arbitrage mein profit is very small, I tell you, even in your equity market, it does happen. People buy at 450 from BSC and sell it at a within half an hour, within 20 minutes, they can sell it at NSE at 452 rupees. अगर 1000 शेयर के ऊपर 2 रुपए भी प्रॉफिट कमाया तो इन मैटर ऑफ 30 मिनट्स यू आर अर्निंग अ प्रॉफिट ऑफ 2000 रुपीज. दैट्स नॉट बैड. सो देज आर आर्बिट्रेजर. एक ही चीज, सेम चीज को एक एक्सचेंज से खरीदेंगे, दूसरे एक्सचेंज में बेचेंगे, एक कंट्री से खरीदेंगे, दूसरे कंट्री में बेच देंगे. बट व्हाट हैपेंस, ऐसे काफी स्मार्ट लोग सब जगह होते हैं एंड स्लोली arbitrage profit is not a very big profit, but yes, you who are quick buyers can definitely make money into it. So okay, so buyer, seller, arbitrager, hedger, speculator. Next comes your market. Financial markets are also a participant into the derivative market. What kind of financial market? हमने देखा OTC market, ETD market. Then there are interbank market. Okay, what one bank buying and selling with another bank. Then you have a small, what you call a short-term market. That is the money market. Then you have a long-term market. You have a bond market. You have an equity market. You have a foreign exchange market. So all these markets are also participants into the derivative market. Then you have financial intermediaries. Who are financial intermediaries? Apart from your stock exchanges, your banks, your brokers, your clearing houses, all these people help you in developing a derivative market. So these are intermediaries. Then there are financial instruments like equity, like bonds, like currency, like commodity. I had been talking about commodity. I think you'll be surprised to know, or I don't know you know or not. There are commodities like weather, मौसम. उसके अंदर भी derivative trade होता है. Japan and Chinese market, there's a huge trade on weather. Indian market, obviously we don't have. We do have trade in livestock, cattle, buffaloes, goats, sheep. Okay, you have huge market in Australia and New Zealand for that. You have derivative market in what you call as apna art and artifacts, paintings. Okay, so derivative market can be on any commodity. You know the most common are food grains, that is wheat, rice, millet. Then you have your metals. Then you have precious metals like gold, silver. Then you have oil. These are the major we know, and it's enough to know these major participants. Okay, so let's move forward. Just a minute. So what is the need? Basically, the need for derivative market is three. That is, you need to minimize your risk, or can you eliminate risk? No, you cannot eliminate risk. Okay, what is risk? Risk is an uncertainty of future returns. मैं जो भी इन्वेस्टमेंट कर रही हूँ उसके ऊपर मुझे फ्यूचर में रिटर्न्स मिलेगा या नहीं मिलेगा, मिलेगा तो कितना मिलेगा, that is known as risk. Another term that is associated with risk is known as exposure. Exposure is not the risk. Exposure is quantum of risk. It means मेरा market, equity market में मैंने 10 लाख रुपए लगाया है. So my exposure is 10 lakh rupees. Is 10 lakh my risk? No, 10 lakhs is my exposure. अब वो 10 lakh के ऊपर मुझे I am anticipating I should get 30,000 return, but I only got 28,000 return. So my risk is that 2,000, right? That is known as risk. Risk is uncertainty of future returns. Exposure is the gross volume of transactions that are subject to risk. And third is hedging. ये तीन चीजों की वजह से हमको derivatives का जरूरत होता है. Okay, the last part. What are the advantages and the disadvantages of derivative market? Diversion of speculative instinct from cash market. It means we are all dealing into the cash market, but cash market is over the counter market, or cash market is abhi ka abhi hame decision lena padta hai. We can't lock the prices of future. So what we are taking, we are moving our speculation not only in the cash market but also in the future market. I want to buy gold for my daughter's wedding, which may be 3 years from now. Okay, so I can slowly and slowly buy gold for 1 year. See the prices are shooting high. I must have, if I'm 5 years ago, I must have bought the gold at 27,000 and today it is around 50,000. Okay, so there I can do it for another 6 months. So today if I buy 50,000 and after 6 months I see it as a 56,000, I can sell it off. Okay. Second is increase hedge for investor in cash market. You have heard about hedging. Reduce risk of holding underlying assets. हमें अपना सब चीज इक्विटी में नहीं रख के हम उसको डेरिवेटिव में भी रख रहे हैं. मैंने क्या बताया था आपको स्टार्टिंग में, if you are keeping it equity, you have to just keep it in the equity and wait for the prices to change. You cannot take advantage in between. जब आपका और एक बार आपने बेच दिया, then there is no advantage. The biggest advantage over here is when you are buying a contract today, you're not paying anything to the exchange. You're only either paying the premium if it is option. Otherwise, you are not paying. Your margin money is only blocked with your bank. You're not paying anything. The whole amount you're not paying. हमने 500 शेयर जो 540 पे बाय किया था, हमें अभी कुछ पे नहीं करना है. हमें कब पे करना है? 1 महीने के बाद. So I'm going to keep that 1 month, that money with me. I can use it into another avenue, and there's an opportunity cost. So I'm earning an opportunity return over there. The cost of transactions are obviously lower because I may cancel and only lose on the premium part. Enhance the price discovery process. I told you, Mahindra buying, XYZ company buying all, so they determine the prices of future. Gold का price कैसे determine होता है? अभी pandemic में लोगों ने huge buying किया, so that's why the gold prices rose. It increases the volume of transaction. Definitely, you were only dealing in equity. Now you're dealing in equity as well as derivatives. You were only selling wheat over the counter. Now you're selling wheat in a what? In a derivative market. So the volume of transaction has definitely increased. They represent a form of insurance against risk. You are protecting your future risk. So it's kind of an insurance against the risk. Next is limitations. Obviously, something which has huge advantage will always have limitation. Leveraging. क्या होता है? People get attracted into this market. This market is high reward market, but you know, very simple fundamental. With high rewards, always associated is a high risk. So people who are very naive to the market should not enter into a derivative market. Derivative market is always for the matured players. Absence of appropriate accounting system. Yes, over a time we are maturing, our markets are maturing. Our accounting system now is the IFRS system. We are using global accounting system. Slowly and slowly we are moving, but still your traditional accounting system has no format of recording these kind of derivatives. You have only format of recording your equity and debentures, those things, but not for derivatives. I'm talking from the accounting perspective, right? आप लोगों ने accounts पढ़ा होगा, like redemption of debentures and redemptions of equity, but you have not heard about redemption of future derivatives, right? So, and obviously there's an inadequate infrastructure, there's an inadequate knowledge in people, there's a financial illiteracy among people. Therefore, the derivative market in India is not yet mature. It is trying to mature now. Okay. So I'll take you the last one. I think everything else is covered. Derivative market today, the foreign currency option in currency pairs other than rupee were the first options permitted by RBI. The RBI has permitted options, interest rate swaps, currency swaps, and other risk reduction OTC derivative product, but now it is not allowed in market. Besides, the forward market to currency has been a vibrant market in India for several decades. In addition, the Forward Market Commission has allowed the अभी the Forward Market Commission भी खत्म हो गया है and it has merged with SEBI. खत्म नहीं हुआ है, but it has merged with SEBI. Has allowed the setting of commodity future exchange. Now there are 5 exchanges that are working in India: MCX, NSE, BSE, NCDX, ICEX. In recent times, stock exchange, NSE and BSE have begun offering commodity derivatives also. They were only dealing in equity derivatives. Now they're also dealing in commodity derivatives, but still not many people are trading for commodity derivatives at NSE and BSE. So I think that's all for the day. Thank you very much. So can I wind up? Hello, Amol sir, can I wind up? Hello. I thank the organizers for inviting me for this wonderful session. Thank you so much. I really enjoyed the session. Thank you.